connect with Sanjiv Bhasin as well, who's joining in on the show. Hi there, Sanjiv. Morning. Let's get in your thoughts then on what happened then with the Bajaj twins in trade yesterday.
Yeah, good morning. Awan, I think Bajaj, both the twins have been on a weak wicket after that, QIP they did. And when knowing fully well that there was some ambiguity on the SEBI order on further business, they went ahead with that. And, it was one of it met with a very poor response, not on the actual size, but on the feedback from the company. So I think that they are on a weaker wicket, as you're aware that prime lending in IPOs and other spaces is seeing a backseat. And Bajaj Finance, for whatever reason, both those twins are under pressure. I don't think there is going to be any comeback very soon as the market shifts towards better names in the private banking. So I think both the Bajaj twins are going to remain under pressure. And now with the RBI and SEBI being very stringent on certain practices, and I'm not saying Bajaj is part of that, but there will be a lot of stringency on observations and procedures. And because of the mass scale lending, which most of these NBFCs do, there can be some more pressure over there on adherence.
Yeah, absolutely. And we've seen the clampdown and very stringent one as one at that. Sanjeev, as of last evening, it was JM Financial. I mean, I'm sure we'll see the impact come by on stock prices as well. But in terms of a market sentiment, what would you think it would do to maybe overheated pockets like small and mid caps? Do you think we will see a sizable correction or profit taking come by there?
Well, Aisha, like I said, beware the Ides of March. I'm not sounding ominous, but yes, there is a much needed correction in the market. Large caps is where I want to protect myself. The correction may be, more in mid caps, but you cannot leave the market as a whole. And we've been suggesting that HDFC Life, ONGC, Vedanta, these are some names. But on mid caps, be very, very cautious. This unprecedented rally and now the flow of money and now this SEBI observations are all telling us that leverage may be over there, not leverage in the shape of the derivatives, but leverage in the shape of co-lending and taking collateral, because a lot of people have NBFCs particularly have started co-lending and so on. So that could be a little bit of a worry, and the valuations are not in sync with a large part of the market. So we think private banks, the stocks which we named, HDFC Bank, HDFC Life, Vedanta, ONGC, these are very, very sweet spots to be in. And for mid caps, it is just about right time to take some money off the table. And like I said, the second half of March can be volatile with a downward bias.
Just want to get you in on that as well, in terms of your opinion as to what the second half could hold. Is that sort of trend that you're observing as well?
Yeah, I think we've already started that trend, Avan, that the mid caps and small caps are showing signs of underperformance. The large caps are the ones which are, where the markets are more heavily dependent upon. And I think we've seen that in this kind of a phase historically, that portfolios, they tend to underperform because it becomes very difficult to shift these kind of mid caps and small caps immediately towards large cap names. So I believe that we could probably be at a point where the mid caps and small caps could underperform. In fact, for the first time, if I'm not wrong, over the last 2 or 3 weeks, when the Nifty had made a new high for itself, initially breaking past about 22,200 levels and then now surpassing 22,400 mark, the mid caps and small cap indices are still shy away from their previous major swing highs or 52-week highs for themselves. So that itself tells you the speed of underperformance. We've already seen the PSU basket, a pocket which was extremely charged up over the second half of 2023. Those indices and many of the stocks from that index have already corrected by a margin of 15% on an average. Some of them have corrected by 25-30% as well. But I would believe that that's a kind of price action which we probably anticipate for the mid caps and small caps broadly. So a 10-15% correction from the previous swing highs for mid caps and small caps could be due.
Okay, let's move on and let's talk about some cheer that came by as well yesterday and a big boost for Indian money markets. Bloomberg Index Services will include now Indian bonds in the Bloomberg Emerging Market Local Currency Index and related indexes as well in a phased manner come January 31st, 2025. Anurag is here with more details.
Bloomberg has become the second financial index provider to include India's bonds in its debt indexes. So Bloomberg will include the Indian government bonds in its emerging markets local currency indexes, and this will be from Jan 31, 2025. Now, the inclusion of Indian bonds will be phased out over a period of the following 10 months, and by November 2025 the full value weightage of Indian bonds in the Bloomberg indexes will be added. Now JP Morgan had decided to include Indian bonds in the debt indexes in September last year, and the JP Morgan's decision to include Indian bonds had led to forecast that about $21 billion would come into Indian debt markets through that move alone. So the weight of the Bloomberg, the inclusion in the Bloomberg indexes will be increased by 10% every month. This will be until October 2025.
Anurag, thanks very much for those details and perhaps quizzing as well the Reserve Bank governor on some of these parameters. But meantime, Sanjiv, pretty positive notes coming in when it comes to the entire tourism space, saying that all the ingredients are in place for a sustained growth and the key beneficiaries will be across the board, be it IRCTC, Indian Hotels, Ease My Trip, VIP Industries, etc. That's from BOFA. What are your thoughts and where are your preferences?
Yeah, one, firstly, on the Bloomberg inclusion of index, now that becomes the second large, rating agency or institution to, up the ante after JP Morgan index. It means that some of the power lenders, particularly REC, PFC and NTPC, they have sovereign bonds which will actually see their yields fall sharply, which is very, very sweet for them as lending becomes easier. And for banks as a whole, particularly large cap banks, I would think re-rating will be very much on the card as cost of money falls. On the tourism side, it's up and running. I was just traveling yesterday again, and like I said, flights are going chock-a-block. Indigo becomes a proxy to that. Hotels are seeing the maximum amount of average revenue per room, which you have seen, and I've been traveling for a long time. I can tell you, even in tier 2, tier 3, it is right through the roof, which means Indian hotel will be actually laughing their way. But it's also a large part of that is in the price. I still think stocks like Ashok Leyland, which are proxy play on the bus market for the Indigo side, we think that your Indigo, again, that becomes a very good proxy play. And across the board, anything to do with entertainment, that part also becomes a very, very good proxy over there. But for us, Indigo and Ashok Leyland and Indian Hotel in this format are in our portfolios. We are very, very overweight, particularly Ashok Leyland, which I think can be a dark horse play for 2024.
Sanjeev, what about Tata Motors? Now it's going to be eventually a demerged entity as well, with the passenger vehicle segment hived off into one and CVs into the other.
Well, Aisha, it has actually taken your breath away, and that is what the markets are all about. Big is getting bigger, and if you thought autos were expensive, even 3, 4, 5 months back, they've come back to surprise. Bajaj Auto and Rajiv Bajaj now saying that 12,000 is a fair value and a conservative person. And Tata Motors actually taking the icing on, being the icing on the cake. So I think both of them have performed brilliantly. And I still think that now it's the time of stocks like Maruti, Ashok Leyland, Motherson Sumi, which I've been saying for a long time, has also hit a new 52-week high. Our preferences lie there. On Tata Motor, I would say that don't wait for the demerger. The deleveraging will still be there because there is leverage on the books. So part profit should be taken in this process of markets re-rating, I think.
Okay. Let's also get in your thoughts then, Sanjeev, as to what the outlook is when it comes to the entire oil and gas space, owing to the fact that we're also looking closely at the likes of an MGL with respect to the CNG prices that have been slashed. How are you looking at this entire space?
Well, Avan, MGL has been on a tear. You know, it was with the IGL was at 420 and MGL was at 1,000, 1,100. It has gone to 1,500. I think there was no ambiguity as far as anything to do with the CNG, the conversion on EVs and what Delhi government had tried to propose. Hence, MGL took the cake, and it continues to be one of the best places for the CNG space and PNG. I think now a large part of that is already in the price. Yes, margins will be here hurt, but volumes will make up for it. So we have a profit book on that. We would say stay away, but I mean book profits because you've had an exceptional run. We still think ONGC is the most undervalued play in the oil and gas space. That along with IOC are two of our picks, and we continue to think these will be outperformers in the medium to longer term.
It's been a pretty decent run, Sanjeev, when it comes to Zomato. Latest news being that Antfin is going to sell about 2,800 crore worth of shares at a 4% discount. Your thoughts?
Well, Zomato has been a cheerleader in the whole fintech stroke, basket of unicorns, and no question. But like we said, these Ant and the soft banks of the world are under pressure globally on a large part of their assets. And if anything, to shore up their dividends or use the money for their own buybacks, part and parcel of that would be there. So I think Zomato has been on a tear and hitting new highs. We have Zomato in our portfolio. We are not upping anything. We are staying put with that. But I think this will be part and parcel of the private equity investors exiting and buying back their own stock or reinvesting, raising liquidity, which is part and parcel of the whole process.
But Sanjeev, good to have you on the show as always. We'll let you go on that note.